Good morning, good afternoon, good evening, folks. Mike Zuber, one rental at a time. And as I mentioned in the daily financial news, we get lucky enough to speak with Mr. Greg Dickerson. He moved back the time slot 4 hours for us. So thank you very much, Greg. I appreciate it, as does the audience.
Absolutely. Yeah. So that's, I'm 3 hours ahead of you. So that's like a 7 hour time warp.
Yeah, exactly. Just all work together. So, hey, I got three exciting topics for you today that I think are really in the news. And the reason I want to talk about them is because if you just hear the headline, it really can freak you out. It really can scare you. But you and I have been doing this a long time. We're really in it, and we're putting money to work all the time. So the first one I want to talk about is a concept of, is the dollar dying? We'll just start there, and then we'll see where we go from there. So, Greg, what do you think? Is the dollar dying? Is King Dollar dying?
No, no, not at all. We're just in those times where we're experiencing a lot of inflation, some of it transitory, some's here to stay. So a lot of people will equate what's going on in the money printing and things like that, to the dollar devaluation when, what it's six of one, half does the other. Are things getting more expensive, or is the dollar, devaluing? So I looked at something the other day, somebody put out and showed what the price of things were back in the 70s. Average annual income was 20 some thousand. Average entry level house was like, I don't know, I can't even remember what it was. I'd have to look it up. I want to say 200,000, but I don't know. It doesn't sound
No,
right.
1970s, I think it was like 27 or 28 grand, I think. And by the end of the 70s, it was 56 grand.
Yeah. Yeah. So, it's all relative, right? People were making less money, so things were less expensive. And we've talked about it before, as interest rates, go down, people make more money, things get more expensive.
Mm-hmm.
So that's not necessarily what I'm thinking in terms of devaluing the dollar to the level that it's really a problem. The dollar is the world's reserve currency. Everything we do, whether you're investing in stocks, cryptos, real estate, whatever, it's to create more dollars. I mean, at the end of the day, that's what people are after, is more dollars.
Right. Yeah. When I think about the King Dollar going away, it's like, my answer is the same as yours. No, but I always kind of push back. I'm like, well, okay, what would replace it? Right. I want to put it back on the onus of the person talking, because at that point, there really isn't anything that has full faith of, a legal system. Doesn't have the quantities. Again, the King Dollar is part of its size makes it so. History, all of that. Are stuff more expensive? Is inflation real? Absolutely. But none of that kind of takes out King Dollar. And the last thing when I think about the dollar is, anytime there's a shock, what happens? People race to the dollar, right? Will the dollar, I think the dollar probably could even get stronger in a year or two, which is kind of counterintuitive, because I think what China is going through right now will lead to a recession, and potentially, I don't know, significant recession, if not all out depression in China, which is going to.
Yeah, China, they're imploding and they're shooting themselves in the foot left and right. I mean, they're getting rid of their dollars. They're just making some really,
they're treating foreign capital bad. They're going to race companies out. Now they're going to do property taxes into a falling market. I mean, it would be hard to shoot yourself in the foot that many times.
Yeah, it's pretty interesting what they're trying to do and what they think they can do about it. And, one of the things they are doing is they're, buying and investing in ports around the world so they can ship their goods, and not have to rely on third-party ports and logistics and things like that. So, I mean, they want world dominance. They want to be the largest economy. They want to be the reserve currency, but it's just not going to happen. The thing about the United States, it's the largest economy. It's, we're governed by laws. We have the largest army, most powerful, army, military force to back up the value of that dollar. So, I mean, that's why everybody else in the world wants it. Could something eventually replace it? I'm not going to say it can't. I mean, it's possible, but it's hard to imagine, and especially in this day and age, what that could be, because regardless of what people think, the United States government and the people of the United States are really the only thing you can actually trust when it comes to having faith in a currency.
Right.
You can't trust any other country and what they're going to do.
No, we've seen plenty of examples. There's a lot, we have high inflation here, but there's hyperinflation going on in other countries, and all out currency devaluations. You think about what I just saw in Lebanon, with their currency, and what's happened in, I think it was Venezuela. And
Yeah, and
Yeah.
dollar devaluation. So when you think about dollar devaluation, putting more currency into circulation, and that, there's more currency in circulation and been created, in the last year than in the history of the world. But that was in response to the pandemic, and where we saw before all the supply chain issues and stuff like that, the biggest inflation was at the asset level. It was all assets, all of them.
Yeah.
We're seeing it in stocks, bonds, commodities, cryptocurrencies, real estate. There's still obviously little pockets, little sectors that did
Mhm.
not appreciate, like certain types of commercial real estate you still can't give away, certain types of areas that property has gone down when the rest of the country's going up,
Mhm.
some areas of the world that are very depressed. So at the end of the day, all of the printing and stimulus that's been done and all the currency that's been put into circulation really hasn't had a hyperinflationary effect yet, like everybody's concerned about. And the real question is, can that continue? At what pace then can that continue? And it's an interesting question. It
Yeah.
really is, because a lot of people think you can't sustain it, that our debt's unsustainable, that the amount of money printing is unsustainable. But we've been on this path,
Yeah.
really since 2009, and haven't had any real serious repercussions yet.
Yeah, it's actually it's something I've looked at a bunch. And again, it's kind of that, what number are you looking at? There's a lot of people that kind of look at the number at just the sheer size, and it's bigger than ever. So definitely a problem. However, just like buying a house, you don't buy a house based on price. Most people buy it on payment. And because this debt is being financed at generational lows, the government's paying it back pretty easily, right? It's kind of below trend. So it's pretty interesting to think about. So one thing I want to kind of do a left turn on you on, just given we talked about asset values going up. I don't know if you saw this. I think it was Elizabeth Warren who initially did this when she was running for president. She talked about taxing billionaires on unrealized gains. It looks like this budget reconciliation could bring that to fruition. Of course, they will sell it as only taxing the billionaires, but just like income tax when it was introduced in 1918 or 1919, it'll eventually probably hit all of us. So I thought I'd ask you about, what do you think about taxing unrealized gains in this new tax scheme they're going to throw at us?
Yeah, it'll be interesting to see if they can actually get that through. And it's hard to believe that the Treasury Secretary of the United States is actually proposing such a thing. I mean, it's just incomprehensible. I mean, it's just hard to comprehend. How do you do that? So you go and tax everybody that has equity in their property when it goes up, and then what do you do when it goes down? Because assets go up and down, markets are good and bad. So hey, tax unrealized gains now, but what if my portfolio goes down? You're going to give me the money back? I mean, I don't see how they could possibly pass something like that. It makes zero sense.
Well, so I actually agree with all of that, except I think it is going to pass because they want to spend another 1.9 or $2 trillion. They've already said they can't raise taxes on corporations for whatever reason. They can't do this. They can't do that. So they've got to, the whole deal of a budget reconciliation, it's got to come at net even. So there has to be tax revenue equal to $2 trillion created. And right now, this seems like a leader because it's very easy to sell. There's only 1,000 billionaires or 900 or whatever the number is. But folks, I have to tell you, I talked about it this morning. Let's see if I have my notes. It's so freaky. I don't have it. But yeah, there was, when the income tax was first reported, it was supposedly on, again, inflation adjusted, anybody who made 80 grand, inflation adjusted, and you were only taxed 1%. And then they did have a second kind of millionaire tax. It was at 6%. This, I think, was 1918. What happened once the government got that pushed through? Because I'm sure they sold it the same way. Hey, we're only going to tax the rich people. We're only going to do this, do that. Slowly, over the course of the next 30 or 40 years, the government got addicted to a new income stream. And when they do, they spend like drunken sailors, and it's our money. So I hate this idea of taxing unrealized gains, even though I'm nowhere close to that limit. It's just because I know it was $1 billion, and then it's 100 million, and then it's 10 million, and then it's $1 million, and then it's 100 grand, and pretty soon we're all paying it. It's bad.
Yeah. We'll see. I mean, that's a very difficult thing to administer and to regulate. There's just so many questions there, and you start going, like you said, you start going after that type of thing at that level, it trickles down. But yeah, I mean, it just doesn't make any sense.
Yeah, they have a spending problem, not an income problem, but they don't want to admit it, so they just kept finding new ways to tax all of us eventually.
Well,
So,
and by the way, so for people watching that don't know and haven't studied modern monetary theory, which is what we're doing, it's the
mhm,
printing, unlimited printing of money to do everything. So how do you pull liquidity back out of the markets? You tax it out. I mean,
mhm.
that's how you bring it back out of the economy. You print and put it out there to stimulate, and then you tax it back, to control inflation and deflate the economy a little bit. And so I mean, it's really, I've thought a lot about it lately. What is the end game here? How far can we go? How long can you keep just printing, inflating the balance sheet of the Fed? And what happens when you get hyperinflation? You get stagflation, and you get recessionary times where we're actually not growing from a GDP standpoint. Then how do you fix all that? You know?
Yeah, it's well, I think the 70s taught us a lot. As you know, I think we're in the 70s kind of repeat, just different variables. I think a lot of people are saying we're not in the 70s because in the 70s, as you know, or you'll remember, it was really an oil driven, commodity driven, right? The OPEC came out, pulled back. It was a scarce resource. Oil was so much a part of all of our manufacturing and lives that it really was the thing. And they're like, hey, that's not happening today. Well, first off, oil is up quite a bit, but I think people are being too literal when they look for a repeat of the 70s. To me,
Yeah, we had
I'm more,
double digit, interest rates.
Mhm.
I mean, there was just all kinds of things going on in the 70s that we weren't printing like we are now. We weren't doing monetary easing. We weren't doing fiscal stimulus. So, a lot of those things weren't happening, just like the Great Depression.
Yeah.
And the argument from the modern monetary theory is if we had done those things, we would have never had a Great Depression, that they didn't do enough back in
Yeah,
those days.
I've heard
They
that as
didn't
well. Yeah.
do, if they'd have done back then what did now in the pandemic, you wouldn't have had a depression. So,
Yeah. It would have been a bad recession.
again,
Yeah.
they're just not thinking. So Janet Yellen, I mean, if she really wants to, buy into this policy and this theory, forget taxing, print. If you
Mm,
need money to spend on stimulus, just print it.
mm.
Don't try to raise the money through taxes. That makes zero sense because you got record high inflation. Now you want to tax, put taxes out there. I mean, inflation's already a tax. Now you're going to put tax on top of it.
Exactly.
You've already, hyperinflated values of assets. So people's buying power, is down a little bit right now. Um, Pretty crazy times.
Yeah. So in the end, for video number one, King Dollar is not dying. I actually think it might get stronger in the years ahead, but certainly not dying today. And I think we should all be concerned about this idea of a brand new income stream for the government, because once it goes through, they'll just keep moving the bar lower. And just like income taxes, where it only impacted a small percent in 1919, it impacts us all now. So, Greg, thank you very much for doing this. How can people find you?
GregDickerson.com. All my information's there. Go check it out. YouTube, podcast, social media, GregDickerson.com.
Yeah, you got to follow him on YouTube, folks. He puts out a lot of content. He has areas of expertise that I simply do not have. And I watch his channel every week. So thank you for all you do, buddy.